convinced you've already missed the once-in-a-lifetime AI gold rush, let me tell you something. You aren't late. You haven't even found the real battlefield yet. While the herd is maniacally chasing chip stocks trading at 100 times earnings, Wall Street is frantically dumping a genuine AI beast. Today, I want to walk you through a completely different narrative. In this market frenzy to find the next NVIDIA, a massive, severely undervalued giant has just taken a brutal beating. The street hates it, they're dumping it, and they've left it for dead. But Cathie Wood, known for her high-conviction bets on disruptive tech, is quietly, yet aggressively, loading up on shares through ARK Invest. The company is PTC. Now, here is the million-dollar question staring you in the face. Is this recent crash a falling knife that's going to cut your hands? Or is it a misunderstood golden opportunity to buy the dip? When we strip away Wall Street's bias, I don't see a boring industrial software company. I see an AI monster in disguise. Today, let's break down why I believe PTC might offer the most attractive risk-reward profile in the entire market right now. First, we need to bypass your boredom filter. When I say industrial software, your brain probably defaults to complex blueprints and dusty old factories. You're wrong. Let's shift your perspective. Imagine you are building a Tesla Model S. You don't just need to draw the blueprints, that's CAD. You need to manage millions of parts from the moment they are conceived until the car is scrapped, that's PLM. You need to write the code that controls the braking system, that's ALM. You even need sensors to predict when that truck will break down long after it leaves the lot, that's SLM. PTC isn't selling a simple tool. They are building the digital nervous system for that vehicle. This is what we call the digital thread. In the world of Industry 4, PTC isn't an optional accessory. It is oxygen. Without it, modern manufacturing suffocates. Here is the kicker. Why is Cathie Wood so obsessed with this trade? Because AI isn't magic. AI is a beast that feeds on data. Right now, every tech giant is building large language models, but they are all missing one thing: proprietary, structured, physical world data. And that is exactly where PTC's moat is widest. PTC holds the keys to the world's most critical industrial design and manufacturing data. When they inject AI into this closed loop, the rules of the game change entirely. Picture this. In the past, a structural optimization might have taken a designer a full week to calculate. Now, PTC's AI assistant, trained on a decade of proprietary data, can tell you in 10 seconds, hey, shave 3 millimeters off this engine bracket. You'll cut costs by 20% and actually increase strength by 10%. This isn't sci-fi. This is happening right now. PTC's CEO, Neil Barua, has made it clear. They are embedding AI into the very DNA of their products. This isn't just a software upgrade. It is a massive spike in switching costs. Once a client adopts this ecosystem, leaving becomes nearly impossible. So, if the story is this good, why is the stock dropping like a stone? This is where we separate smart money from panic money. The culprit behind the drop isn't a broken company. It's the ghost of the macro economy. Look at the PMI data, Purchasing Managers Index. US manufacturing has been in contraction territory for a while. Factory owners are spooked, budgets are being slashed, and consequently, PTC's short-term orders look soft. Wall Street analysts who often can't see past the next quarterly report panicked. They downgraded the stock, triggering the sell-off. But listen to me. This is exactly the opportunity. If you are a long-term investor, you pray for moments like this. You are getting the chance to buy a technology monopoly at a recession discount. Manufacturing is cyclical, it will eventually recover. But PTC's dominance in the AI era, that is structural. Finally, let's put sentiment aside and look strictly at the cash. In the SaaS software as a service world, if you see a company with high retention rates that is still growing, you usually have to pay a nosebleed valuation for it. But look at PTC. Even in this terrible macro environment, its free cash flow is growing faster than its revenue. This company is an absolute cash printing machine. According to management's guidance, we are looking at $1 billion in free cash flow by 2026. What does that mean for you? It means you are buying it today at roughly 21 times PFCF. In a market where AI hype stocks are trading at 50 or 100 times valuation, Paying 21 times for PTC is bargain bin pricing. You are essentially paying a Toyota price to buy a Ferrari that's parked in the garage just because it's raining outside. This is a classic market dislocation. On one side, you have a widening competitive moat powered by AI. On the other, you have an emotional sell-off driven by short-term macro headwinds. Cathie Wood spotted the asymmetric opportunity here: limited downside, massive upside. If you believe AI can do more than just write emails and draw pictures, that it can actually reshape the real economy, and if you have the patience to wait for the manufacturing cycle to turn, then PTC's current price point might be the entry point you've been waiting for. Of course, the market is always filled with risk. Do your own due diligence. But this stock absolutely deserves a spot on your watch list. If you enjoyed this deep dive analysis that peels back the layers to find the real value, don't forget to like and subscribe. I'll see you in the next one.